the central banks are petrified of rising gold, but silver being such a much smaller market, it cannot let silver get out of control, because then that would be it'd be like throwing gasoline on gold's fire. So they've attacked silver harder than they have gold because because they can, it's a smaller market, and B, because an explosion in silver is the fuse to an explosion in gold. It's the end of empire, because what a $3,000, $5,000, $50,000 per ounce price on gold says is that the currency's worthless. Once you get to a real high number in gold, then the confidence is completely broken in the fiat currency that's issued by governments unbacked.
The U.S. dollar experienced pressure in the first half of Wednesday's session, continuing the decline from Tuesday, influenced by various internal and external factors. This dollar weakening has coincided with a significant rise in gold prices, which began in late 2022 when gold was trading at $1,600. This increase in gold has been driven by substantial central bank purchases, spurred by the United States' weaponization of the dollar, exemplified by freezing Russia's central bank foreign currency assets as part of sanctions following the Ukraine invasion. BillHolter is a precious metals expert at BillHolter.com, known for his in-depth analysis of economic trends. In his analysis, BillHolter suggests that central banks fear rising gold prices but are even more worried about silver. He predicts that if gold reaches $5,000, it would signal a collapse in confidence in fiat currencies, marking the end of an era. Regarding the physical markets, Holter notes that they are starting to override paper markets, with significant movements in metals beginning last. While emphasizing silver's undervaluation compared to gold, BillHolter has persistently championed the ratio trade. He foresees a scenario where, if the current ratio of 80 diminishes to 40, silver's performance against gold could double, enabling investors to obtain more gold ounces at a reduced cost through silver swaps. Silver prices have achieved remarkable gains during the last quarter of last year and the first quarter of this year, with a fiery start in the second quarter, rising more than 15% so far within just the first 2 weeks of this quarter. Undoubtedly, this amazing performance of silver at the start of the second quarter of this year heralds more extensive rises during the remainder of this year, amid expectations of reaching the $35 per ounce barrier before the end of 2024. Concurrently, Holter observes a significant shift from the west to the east, warning that acquiring silver or gold will become much more difficult for those who haven't invested yet. Now we present the clips of BillHolter's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The physical markets are now beginning to negate the paper markets. Go back to October, November of last year, and that's when the moves in the metals started, and they really went into gear the end of February, early March. That in gold, the big buyer has been China. You're also seeing pretty good buying out of Europe. In silver, the huge buying is coming out of India. And both metals got pretty overbought in early mid-April. We had a pretty good, decent-sized pullback. The prices relaxed, and the gold nor silver were overbought. And then just in the last week and a half or so, you started to see some strength. And I picked up on the article that I posted. I posted 3 charts: gold, silver, and the miners. I used the HUI index. And what you'll see is that the HUI has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout. And those aren't new highs until we get to $50. But there's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months' time, you'll see $50 in silver. And of course, gold is again pushing up against 2,400. Over 2425 is a new high. There is a vast reset from west to east happening. And once that happens, you're either in silver and gold or you're out, and you won't have the ability to get in. So if you think these prices are high, wait 3 months, 6 months, a year. If were China to revalue their gold, and the way to describe that, not revalue gold, but devalue their currency, that's going to price the metal. So if you're trying to time this, good luck with it. I think that's a foolish move. You're not going to sell gold or silver until there's a currency that you can trust, until there's a place for you to put your money. But we're nowhere near that. We're nowhere near a peak, so to speak. The peak pricing in gold and silver will be, if you want to call it, the bottom pricing on fiat, and fiat ultimately can go to zero. So the inverse of zero is infinity. So I guess my answer is, I would answer the question with the same question: where would you put the money? And if there's no place to put the money, then why would you get out of gold or silver, which you know cannot bankrupt? It can't be devalued. So you sit with the metal until you find a currency that you can trust. I've been talking about the ratio trade for years and years. Silver is way undervalued to gold, and I urge people to overweight in silver. And at a later date, as the ratio comes down, I mean, here we are at 80. If the ratio came down to 40, that would mean silver doubled the performance of gold. And if you swapped silver for gold at a 40 ratio, you'd end up with twice as many gold ounces than if you just bought them outright today. So you'd be buying gold with you'd be buying less expensive gold with more expensive silver, and you'd end up with more gold.
Federal Reserve Chair Jerome Powell delivered that grim warning to the Senate Banking Committee in early March. He said it's a danger that will face smaller and medium-sized banks for years to come, as the effects of high interest rates and commercial real estate troubles continue to weigh on the banking industry. Highlighting the impending crisis, BillHolter predicts imminent global bank failures, with current ones merely foreshadowing what's to come. He foresees massive banking system losses, potentially reaching trillions, due to tighter credit and higher interest rates, compared to the 2008 and 2009 crisis, but on a more severe scale. Moody's has a negative outlook on the U.S. banking industry for 2024. Fitch gave the sector a deteriorating outlook, expecting a moderate amount of bank failures over the year. Furthermore, regarding China's economic strategy, Holter predicts they will revalue gold higher and devalue the yuan to combat deflation, which will appear as a collapse to foreign currencies and drag them down. He notes China's significant debt issues and believes this devaluation will make their debt more manageable. Let's get back to the interview.
Well, there's going to be bank failures all over the world, and the bank failures you're seeing now are small potatoes. All you have to do is look at the commercial real estate market. I mean, I just posted an article the other day of the Waldorf Astoria that was owned by Trump. It sold in 2021 for, I think, 137 million, and it just went to auction and sold for 12.5 million. So that's over a 90% drop in value in 3 years' time. But somebody's going to eat those losses because that was debt. It was outstanding. A lot of that was debt. So those bonds have to be written down, and somebody has to eat those losses. And if you look at the banking system, I mean, you're looking at literally $1 trillion of losses in debt, in bonds, in credit that had been forwarded. And of course, keep in mind, the reason these properties went to the prices they went to was because credit was available. And now credit has become much tighter. The underwriting standards are tighter. Interest rates are higher. The math doesn't work. And, one of the primary losers will be the banking system. It's going to be 2008, 2009 on steroids. I wouldn't characterize it as a collapse, but I think maybe the Chinese yuan, obviously we're watching the yen right now really hit the skids. But I think the Chinese are going to revalue gold higher. They've got a real problem. Their debt creation actually went negative late last year, and their M1 money supply has just recently gone negative. So you've got a highly indebted system that's staring deflation right in the face. And the best way to fight deflation is through devaluing your currency. So I suspect you're going to see a revaluation of the yuan versus gold, and that will reprice gold higher, the yuan lower, and it will be in managed form, if you will. But that will to foreign currencies, it's going to look the same thing as a collapse. So if I had to bet, I would bet that China would be the first currency to truly devalue on purpose versus gold, but it devalues them versus foreign currencies, and that'll drag foreign currencies down with them. China, since 2008, anytime the world, it looked like there was going to be a slowdown or an actual deflation, China would reflate. And a devaluation of the yuan, that would be a reflation act. China's national debt on a percentage basis, I don't believe is as high as the U.S., but their total debt, when you include the provinces, the cities, corporate debt, individual debt, they've got a debt problem. Right now, China is considering buying up literally millions of empty homes to try to clean up that real estate market. So it looks to me like something's going to happen. I think that's something that's going to happen is China's going to devalue. And that makes the debt much more easily payable.
With interest rates at their highest levels since 2001, higher borrowing costs have pressured banks' balance sheets as borrowers struggle to pay debts or avoid the credit market altogether. Gold prices reached historic highs, while economists say the momentum could carry the yellow metal to $3,000 before the next business cycle shift, a 30% increase from current levels. How will the predicted rise in gold prices, potential currency collapses, and looming bank failures impact the global financial system and your personal investment strategy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.